welcome back to Stock Market Movers, where we get you all the headlines and, of course, the experts to keep you in the informational edge. I'm excited to get into our interview today. We got David Keller, Chief Market Strategist at Stock Charts. Don't miss that. That's going to be at 1:15. And then we'll get into, of course, our headlines of the day. Is a dash for trash over here? JP Morgan, the banks bouncing back. We'll talk about Delta a little bit back on the liftoff as they shake off their report. Delta is making its way back. We'll see if it's able to climb all that wall of worry. Right now, bouncing back. And of course, there was some comments by the CEO that I think are definitely interesting. BlackRock, United Health, Virgin Galactic, Tesla on the tape today. Import price index, export price index, Michigan consumer sentiment. Find out everything right here on Stock Market Movers. There are three ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. All right, traders, how we doing out there? Let's get into the action. Let's take a look at the SPY right now at 396.60s, and it just climbed that wall of worry. I'll show you guys that from the pre-market action. We were coming down. We went down there towards a low on the day of 393.02. We're able to bounce back all the way up there on the first ramp towards around 396.76. Right now, we just pushed through that, went to 396.92. We'll look to see if we can continue into the 397. Of course, a lot of analysts are pointing out today what area? Well, the 200-day moving average. 200-day moving average at 397.20. A close above that would be really good for the bulls. We'll have to wait and see what happens in the SPY towards the close. Of course, we did get some numbers to hit today. We got import prices to come in at 0.4 versus a negative 9%. Prior was a negative 0.7%. So definitely bringing in some imports there. Exports at negative 2.6% versus negative 0.5%. That's not the best number you wanted to see there, but a little bit of a mixed signal there. And imports, that's not the best either, but it's way better than the negatives that we were seeing. And it's a little bit of a mixed signal. I feel like it's just something that we're just going to push off towards the next major economic number. Of course, at the end of the month, we'll be getting some wage inflation data that we definitely want to keep our eyes open to. And the first week of February, right? That's when we'll get the next meeting. What will happen at that interest rate FOMC meeting? Will we raise rates 50 basis points or will it be 25 basis points? You guys can take some votes in the chat. What do you guys think? We get 50 or do we get 25 basis points on the next rate hike? All right, let's keep going. Let's get into the action. Let's go towards the banks, as definitely a lot of people are watching these banks to see what was going to happen today. JPM coming all the way back to 143, climbing that wall of worry and getting back up there. I'm going to take off my line so you guys can see what happened. We went even back through that pre-market resistance, now up towards 143.08. You can see even on the daily chart, look how this pulled back and continued the strength. Will this continue the strength in some other names, right? Of course, you guys can see their earnings. Like always, follow Benzinga Pro. You guys can get your 2-week trial so you guys can keep up with all these earnings. Bank of America also bouncing back, of course, following kind of JPM. Not as strong as JPM, but definitely got back those losses, right? Came down, climbed the wall of worry. We'll see what happens there in Bank of America. And both of these, to kind of state, were a beat and a beat, right? They didn't really miss too much on these expectations. They beat and beat. So it wasn't an expectation for these to go down. Of course, JPM had already run, so some people were thinking that it was already priced in. Now, one that did miss a little bit was Wells Fargo, but that was just on sales. And you guys can see here, it still climbed that wall of worry. And so if the stock is going to get hit on a miss, then clear that level, well, that just shows you how much these banks are strong right now. And I think this is definitely somewhere where you need to be kind of watching. Another way to do this, right, would be XLF, right? Just going into the kind of the ETF, the financial ETF. Well, this is looking actually interesting as it's starting to turn back around, right? Now we're going to take a look. Do we start getting through all these highs here? And if we can get back through, especially this 36.49, it's going to be looking like we shook the bottom of this and are starting to come back into the price action. Of course, financial has been an interesting area. Citi, I think, is really the one that kind of helped out in the morning. This one has done it before where it's climbed the wall of worry. It reported, came down on 8 a.m., even went down to a low of 46.72, then to just pop right after that. It went to 49.85. This is one thing that I'm definitely going to be watching, is that Citigroup has a tendency of doing this and then the others follow. That's exactly what happened today. Now the question will be, when will Citi turn around? Of course, we got kind of this similar pop here in July 14th. And then eventually it turned around a little bit shortly after that. We'll see if we get back to those levels. That was around the 54 level. Of course, Wells Fargo, and let me go ahead and throw up Citigroup's earnings here as they beat and beat. And I think that's the important thing there. Only one kind of missed on the sales. And that's why some people were asking questions this morning, like, why are the banks down so much? They look like they beat, right? Well, that's just how it is. Sometimes it all depends on the day that you're reporting, and that can turn things around. Bean and Rice saying, what a great start of the year. And I do agree. The Bulls have full control right now. And I think that's something that we need to keep watch. We'll see what happens. Got to keep going. Put your favorite, scariest movie in the chat for Happy Friday the 13th. I like that one, Beans. I'll join in on that one. Of course, favorite, scariest movie? Probably The Ring. The Ring, but it's not really a favorite of mine. But I do think that when that one came out, it was pretty scary, right? Well, we'll see what happens. All right, nice little tangent there. We'll keep going. We'll get into the action. Let's take a look at what else is moving. Of course, the bank's getting a little bit of a lift, but let's go to Delta Airlines as they reported earnings also. Let's take a look at how the airlines are doing today. Delta, of course, had been running into this number, took a big hit here. Let's read their numbers and what was reported. Q4 adjusted EPS at $1.48 beat the $1.33 estimate. Adjusted operating revenue of $12.3 billion beat the $12.23 billion estimate. They do see Q1 EPS at 15 cents to 40 cents on the high end versus a 55-cent estimate. Of course, they are seeing that it could be some labor issues, some labor costs that affect them in the first quarter. That could affect the EPS there. But they did say that they will see fiscal year 23 EPS at $5 to $6 versus the $5.07 estimate. Now, an interesting comment by the CEO said on CNBC that the outage was not the FAA's fault when the computers went down. That's something that I need to keep watch. What's going to happen with that? Was it more of a cybersecurity concern? Was it more of a different airline that was causing issues? Something to keep watch. We'll find out what happened in that FAA. I'm sure we'll be hearing some more news coming out of that. I also saw that there was some pressure by Congress on Love to find out what happened in their situation. So look at those stocks. They could be having some more catalysts coming in. American Airlines climbing the wall of worry, even on Delta's numbers, took a hit, came right back up there to 17. Look at this run. I know I'm a little bit kind of salty on this one. I'll just say it, team. I was trying to get in on this one on 14, got stopped out through that down move. Now it's pretty up there. I'll be looking for pullbacks to the 200-day moving average around 1474 right now. If that can pull back there towards 15, 14s, I'll be looking to join the party, but definitely American Airlines looking great right now. And overall, we've been talking about Jets ETF. That's continuing the day. Doesn't look bad at all and had a great 23 to start. All right, what's going on out there? How we doing? Sabrina, what's up? Nicholas, how we doing? Michael, you looking at Rivian? I'll take a look at Rivian for you. Just stick around on what was hot and what was not. I always like to take a couple of tickers. I'll take a look at that Rivian coming up. Sabrina saying, boring day. Blue on pre-market prep was the highlight. Yes, you always want to have our boy Blue, especially when we have him on pre-market prep. All right, let's go ahead. Let's take a look at it. Just give me one quick second, team. I'm going to take a quick second, just play a little Benzinga Pro trailer, and I will be right back. Just got to fix something up here for my guest.
Introducing Portfolio Synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, team, let's keep going here. Looks like Jets ETF had done a nice little push. Now let's get into one more earnings stock, as I want to roll through all of these, and then we'll take a little bit longer on what was hot and what was not. And of course, don't forget, we're going to talk about the dash for trash. Is it done yet? We'll talk about that on what was hot and what was not. Now let's get into United Health, as I wanted to take a look at this stock because it has been taking a big pullback as of late. A lot of this, I feel, came from the Cigna chart, but as you can see today, being able to bounce back, but now starting to pull back here, UNH. Let's talk about their numbers. United Health Group Q4 EPS at $5.34, beat the $5.17 estimate. Sales at $82.79 billion, beat the $82.59 billion estimate. United Health Q4 revenue grow 12% year over year and reaffirms fiscal year 23 outlook. We'll see what happens there on United Health, is if it's able to hold the gains that it did in the intraday. Of course, in the pre-market, you saw that decline. We'll look to see if it's able to at least hold on the day. Other stocks you guys can be watching, also Cigna. You can see how that kind of popped back up too. This was also pulling back, now starting to get a little bit of a bounce back. The last one that I give in that space, kind of ELV. This is also one that I saw strong, pulled back with that UNH. We'll see if it's able to get it really going. For me, I would really like to see a close back above 500 for UNH, but right now you can see we just cut below that. We're towards 496.63. We'll have to wait and find out what happens in these healthcare plans. Of course, CVS is in this similar space, right? And in that industry. So we'll look to see if maybe this one can get going too. Also has pulled back significantly in the last kind of, let's say, month and a half, pulled back about like 14, 15%. We'll look to see if it starts catching the bounce. All right, getting out of United Healthline and CVS, it's time to get into our first interview today. You guys smash the like. Let's get it started. All right, let's bring in David Keller, Chief Market Strategist at Stock Charts. How are we doing today, David?
I'm good. How are you doing?
Doing great. It's great to have you on. Excited to get into the action. Of course, yesterday, the markets got a little shakeup and responded positively to the CPI report. What did you think of the market's reaction and anything that caught your attention in the CPI report?
Yeah, it's a really good question. I think all eyes here in 2023 are on the Fed and on inflation data. I mean, inflation was the story in 2022 as we transition to this new year. I think it's all about how the market is anticipating the Fed sort of getting to the end of this tightening phase. And certainly you can see the light at the end of the tunnel. It's just the length of the tunnel keeps sort of fluctuating on us, right? It's the question of how long the runway is really going to be. So inflation data and really what we're in right now in general is positive inflation data, if inflation continues to come down overall and give the sign that the Fed's activities are actually starting to, have an impact, what it certainly seems to do, I think the chance of the Fed sort of wrapping up sooner rather than later is much, much higher. That certainly is a huge tailwind for risk assets. We're seeing that play out since the October low here.
Of course, for a long time in 2022, the talk was where the Fed fund rate would end up, right? I feel like we all can kind of put it somewhere between maybe a little bit under 5 to maybe 5.5, even if you wanted to go and push it to a little extreme. But this is going to help, right? Because we can at least start doing a little bit more of the DCF models, looking into how evaluations are actually going to make sense once we get to that Fed fund rate. Do you feel that this is going to give an advantage this year where we really can start seeing some money get back into work?
Yeah, I mean, it's a really good point. You mentioned discount cash flow. And I mean, what you have to remember is when interest rates are high, right, which is really driven by what the Fed's doing, higher interest rates just means the future earnings potential of growth stocks are less and less attractive. When rates come off, so you saw the 10-year yield top out around 4.25. It's now down in the mid threes. That's a big shift. And that all of a sudden makes the growth prospects of growth stocks a lot more attractive. Now, the leadership so far has been from sort of the more value-oriented parts of the market, like energy, industrials, materials. Stocks like Boeing and Raytheon and others have had really, really good runs. The big growth stocks start to participate, right? Amazon starts to rally off the lows. Microsoft starts to look better. That's when you see our growth-oriented benchmarks start to really improve. And potentially we're seeing the beginning of that here in January.
Yeah, it's been a good January effect for smaller caps and large caps. We've been seeing plenty of different stocks get some move. Of course, even some of the big tech getting a little bit of a push up. Are you concerned about potentially maybe big tech going into earnings, though, as we get closer and closer to their reports?
100%. So this morning we sort of kick off earnings season. We had a lot of banks reporting this morning. Bank of America, Wells Fargo, JP Morgan, and sort of mixed results. They all sort of gap down at the open after trading, lower after hours. I think earnings season is always often a big catalyst, right? That's when you can see things move very quickly. This particular earnings season is when you're going to see companies talking about what they're expecting for 2023, what inflationary pressures may do to their business models and their ability to grow earnings over time. I think for big technology, this could certainly be a huge opportunity to start to recover. On the other hand, we're a couple bad news headlines away from the market going down very, very quickly. So as much as I'm encouraged by the rally off the lows, it still feels in some ways precarious. The S&P gets above 4,000, 4,100. The picture starts to change. We're not quite there yet, I don't think.
Yeah, definitely. If we can get past those highs that we had recently around the 410s, things would be looking a lot better, right? Technically, especially getting out of that channel that we've been in. Of course, one of the stocks that has been hit hard, especially if you look at it technically wise, has been Tesla. Any thoughts on Tesla?
Tesla is a beaten down name, and a lot of names in sort of that group and that electric vehicles and a lot of the other emerging technology names have certainly struggled, right? And I think they underperformed quite a bit, particularly going into the end of the year. Tesla just coming into the new year oversold, and that's a technical configuration, basically saying it's moved too low too quickly. So what you could often expect when something's oversold is you get at the very least sort of a mean reversion bounce. Right? I see a bounce back to the upside because it's gotten beaten down so quickly that eventually some people really start to see an opportunity and bet on short-term strength. I'm not seeing enough on Tesla to be really excited and pound the table about the most bullish chart ever. And I think what you would need to see is something more of a rotation, right? Some sort of sign that not just people are buying the dip in the price, but actually starting to accumulate positions. I don't think we've seen that yet. And there's a lot of upside before Tesla can hit even some of the moving averages you're showing on your screen, right? It's been in such a downtrend. It really needs to recover quite a bit to start to look more constructive. But you've seen that rotation in other names around the market. So I think it's certainly possible, but it remains to be seen.
Yeah, recently we just even saw a little bit of I'd call it the dash for trash, right? A lot of these kind of smaller trade names making some lift, whether you want to call them meme stocks, high short interest, they have been getting a little bit of a push. Do you expect to see this kind of change rotation eventually?
Yeah, well, I was taught that a rising tide lifts all boats, right? So if you can analyze the overall market environment, you get a sense of where most stocks are going to be. And that wasn't the case in a lot of ways in 2022, right? You had sectors like energy that did well while the markets were struggling, and you had different leadership themes. But certainly in the last couple of months, you've seen kind of everything rotate. A lot of breadth indicators we look at that measure just participation in the uptrend, all turning very, very positive, right? The advanced decline line on the New York Stock Exchange has made a new swing high, even though the S&P and the NASDAQ have not done so just yet. One of my favorite ratios to look at is equal weighted S&P versus the cap weighted S&P. So you can use two ETFs, the RSP, which is the equal weighted S&P, the SPY as the cap weighted version. That's making new highs here recently, right? So you're seeing strength in the equal weighted versus the cap weighted, which means stay away from the mega cap, sort of the FANG stocks. It's all the other stuff that's really starting to participate. And while those mega cap names can certainly catch up, they're not leading the way higher. It's sort of the other things. And so I think it is a really good opportunity for equity traders, investors to look opportunistically at some of those stocks that are really starting to work.
Really love what you mentioned there, Dave, because I always have a tendency of talking about this. I feel like not too many people talk about how weighted some of these ETFs are and how that can kind of deter your view overall if you would look at things on an equal weighted basis. That's why I have a tendency, at least for my TC 2000, I use a lot of the indexes that they have because I like that they are more equally weighted, and I'm able to find more of the relative strength, looking for where the rotation's really going. Is it the bigger stocks, or is it just an everything rally? Well, those are the type of questions we want to be asking, especially when we're having moves like we had right now in the market. And of course, it's going to get interesting as we keep going further and further closer towards the FOMC meeting. We'll see what happens if we get, 50 or 25 basis points. But overall, do you think that this is going to be a better year for technology?
It's hard. I can't imagine a worse year for technology. So I'm going to take the $1 bet. I'm going to say absolutely. But I mean, the question is to what magnitude, right? And how does technology do relative to other sectors? A lot of our work is focused on relative strength, which is not just how this particular sector, how this particular stock is doing, but what that means relative to all the other bets you could make. And as an equity investor, you have thousands of levers you could pull at any given moment for stocks and ETFs. And with ETFs, we have so many different plays that we could potentially make. But I think the fact that technology has been so beaten down, right? Major names in those in the XLK and communication services down 30, 40, 50%. At some point, we will look back and see that, I think, as an amazing buying opportunity. But you have to remember, between this moment and that moment where the uptrend has continued, there's a lot of noise and a lot of confusion that can happen. So for me, I'm happy owning things and layering into things that are starting to show signs of improvement. I'm seeing that in certain places and some parts of tech, right? Things like Logitech are names that are bouncing off the lows very, very well. But let's wait for some of the other ones to participate. I think those equal weighted indexes and ETFs that you mentioned, I think, are a really good way to sort of make sense of that.
Yeah, definitely helps. Now let's go ahead. We'll move a little bit out of the overall market. Want to understand a little bit more about stock charts and, of course, you, David. So let's talk about, how do you stay on current market trends and changes in the financial industry?
Yeah, I talk with a lot of our viewers about what I call situational awareness, and that comes from time learning to fly an airplane. So one of the first things you learn when you start flying an airplane, your instructor sitting next to you, is you need to have good situational awareness, meaning where are you at relative to everything around you, right? Because the main cause of accidents for private pilots is human error. It's bad decision making, often because you don't realize where you are, you're not paying attention to obstacles or clouds or bad weather. And so I think a lot of times for investors, we also don't pay enough attention to the weather, right? The weather report and what's happening around us. For me, charts are a brilliant way of doing that. So, routines are a really important part of my process, having checklists that I follow every morning to make sense of things. And for me, starting with a weekly chart of the S&P, a daily chart of the S&P, and then going through about 100 charts while I have my cup of coffee every morning is a really important process. So I think a lot of people, if you're struggling to make sense of the markets right here, think about how you're spending your time at the beginning of your day as a trader. And I bet you can find some little ways you can upgrade that through the course of the year.
Definitely love it. And I know that Stock Charts just recently launched a new mobile app, right? Tell us a little bit about that.
Yeah, so we're a web-based platform. Our founder, Chip Anderson, was an early Microsoft engineer. So Stock Charts has been around for quite some time. And with people like John Murphy and Martin Pring, like guys who really wrote the books on technical analysis that are sharing their comments with all of our users. But we certainly saw the value in having a good mobile app. And what's good is our website, you could use it on a phone pretty well, but now we have something that's really optimized for it. And so I found this morning just sort of getting ready to come in and checking in on what was happening, right out of the open. We're on the West Coast, so I'm sort of checking the open around 6:30 a.m. Local time here, and just seeing what's happening. Having a set of chart lists focusing on stocks making new highs and new lows, top-ranked ETFs using a ranking system that we have on Stock Charts. Being able to flip through those charts quickly is a really, really good way of making sense of things. And again, upgrading your situational awareness. So the mobile app is out, and I think it's a really fantastic add to sort of our overall offering.
Yeah, definitely. It's always great to have tools that can help you make things easier. That's what I always say is find those tools, because if you can, then stop working hard, right? There's a lot of people that work way too hard when you have tools that are right there for you. Then we can start using that hard train of thought to really kind of getting that process together for our trading execution, right?
I
Now,
love
of
it.
course,
Work smarter, not harder, right?
yes, yes. It's sometimes this day you still see it. You're like, come on, man. We have some technology to help you out there, right? Now, of course, I am studying for my CMT right now, and I like to ask this question often. What is your favorite indicator to use?
Ooh, really good question. And first off, congrats on going through that journey. I took the CMT a couple of years ago and enjoyed a great time. I learned so much from that whole process, and I thought about what I was as an analyst going into the CMT and then coming out. And I will tell you, coming out, I was way more well-rounded and I had a much better sense of things. So I wish you the best. That's a tough process, but I think one that you'll really, really be proud of. What's my favorite indicator? It's interesting. If I knew nothing else, I would say price itself is one of the most important things to look at. But for me, RSI has become one of the indicators. To think about an actual technical indicator, RSI has been one of the ones that I've used heavily through the course of my career. And I had a chance to work with people like Connie Brown, who wrote a fantastic book thinking about oscillators. Met with Andrew Cardwell, who really made a name for himself talking about RSI in different phases. And their work, I think, was really, really built on Wells Wilder's original work with the RSI. It's a fantastic way of thinking about momentum shifts. And so thinking about overbought and oversold conditions on a stock like Tesla, overbought conditions on energy names after they've ripped to the upside, really, really helpful. But also thinking about the phases of the RSI, right? Our overall, is the momentum shifting more bullish or more bearish? And that was an amazing light bulb moment for me when I was studying for the CMT and read Connie Brown's book. So I think RSI is a really fantastic way. Just taking a list of anything, stocks, ETFs, and ranking them based on their RSI, which I do often, is a fantastic way of just focusing on strength and weakness within a group of anything.
Love it. I couldn't disagree with that. I have RSI on my charts just about every single time, and can't blame you for it. I always look for extremes to try to find some edge, right? Because when we're in the middle of the RSI, it's not really giving us too much, right? But when we're at those extreme moments, could be some edge there. We got to all look into it, find what works best for us. Can you discuss any specific investment that might have contributed to your success, David, to wrap things up?
Ooh, an investment that contributed to my success. I'm going to give you a two-part answer. The one would be the obvious, investing in my own learning and investing in my education. I think as much as we think about how we allocate capital, I think how we allocate our time is a much more important question. And so educating yourself on some of the tools of the technical analyst, some of the ways that you can manage risk and identify opportunity, I think is going to pay so many dividends down the road. So whether it's the CMT or like Chart School on Stock Charts, which is a free resource, I think that's a really, really important step for particularly novice traders to follow. For me, to be honest, the investment I probably learned the most from in the last 12 months, I would say would be poor investment decisions. And I've been doing this for 22 and a half years, and I'd love to tell you stop making mistakes after a certain amount of time. I've not found that finish line yet, and I think you continue to do it. So I had a number of misses. One was thinking that cannabis stocks would rally, and they sort of rallied up to a certain point, they just continued to go lower. So remembering to stay patient and remembering to wait for the market to tell you that the conditions are optimal for an entry point. I'm a professional technical analyst, but I still seem to be learning those lessons here 22 plus years into the road.
Yeah, I don't think that will ever go away, and I think that that's the fun part of it too, right? Is learning that.
It's one of the best parts of what we get to do, to be honest with you.
Yeah, and that's what I love. Every day is going to be different. We're always working to improve our skills, and it seems like you're still doing that. So appreciate you coming on today. You guys can check out, of course, stock charts. They do got a free 1-month trial if you guys want to go ahead and just check it out. Check out also the Chart School and different stock charts TV. You guys can definitely learn from it. Appreciate you coming on today, David. Have a good one.
Yeah, cheers. Have a great weekend.
Thank you. All right, that was a great one. Like always, I always think it's great when we get, kind of people that really see it, are in the woodwork every day, looking at charts. Like he said, getting my little coffee every morning, going through 100 charts. You got to find the process that works for you, right? And I feel like a lot of traders sometimes get lost in what? Well, they just want to kind of look at the gappers list, right? What stock's gapping, what stock's moving, which is more of a bottom up approach, right? And I like to work more in the opposite. That's what you guys see me do here often, is work more in a top-down approach. And what do I mean by a top-down approach? We're about to just go through it right now. Let's get into what was hot and what was not today as we get into it. Like always, one of the things of what was hot and what was not is looking for rotation, right? We're looking to see where the money's going, not where it's been, right? So that's what it's all about. Let's get looking here. Consumer cyclical. Having a good day here. We've talked about this earlier in the week. Why is consumer cyclical getting the lift with the market? Because a lot of the higher beta names are going to be in this sector, right? Getting a nice little push here. Consumer cyclical, you got specialty retail in there. Department stores continuing. Macy's, nice little lift in the last couple of days, right? Specialty retail, you got bigger names like China names and Amazon, right? Baba getting the lift there. PDD getting the lift. JD. Ooh, JD's chart actually looks a little interesting there with that daily candle, especially if we see Baba and PDD continue, right? We'll see what happens on those. Resorts and casinos. We've talked about Wynn for about like 2 weeks now. It's just been pushing. And a lot of this, based on China's reopening. Had about a 20% move for the year already. So keep your eyes on these. And of course, I've given the smaller name like MLCO if you want to take a look at that. But definitely LVS, Wynn, having great years to start. And a lot of that based on that China reopening. You could also take a look at Leisure. Leisure's been doing really well. Expedia's one to keep on watch there. Booking, we've talked about how they've got an uplift rating. That's getting a nice little push. And then the Carnival Cruise Lines, right? Well, Carnival Cruise Line got a little lift there, continuing the push for the year, has about like 31% moves there. Royal Caribbean, RCL, NCLH, right? It looks like the cruise lines are being able to work up that wall of worry. A lot of this also residential construction, advertising agencies, home improvement stores even making a nice little push. Wanted to see if Home Depot was going to stay strong today. That one's a little bit pulling back now. We'll look to see if we get the next lift on Home Depot and Lowe's. All right, let's keep going. Financial services. You guys know those are bouncing back. We talked about those, the banks, right? The banks causing that comeback there. So we'll see what happens on that, if we're able to get back down, or do we just keep on pushing the wall of worry? At JPM's chart now, that's looking really good. Of course, Goldman Sachs will be reporting next week. I talked about it earlier this week that 350 looked so good. Well, we're a little bit of ways away from that already. We're towards about a 7% gain on Goldman. We'll see if this actually turns around. Also, you can keep watch on maybe Morgan Stanley to take that lift also. You can see how it's been pushing. We'll see what happens to these financial service names. Visa has also been one that I've been keeping a close eye on. I've been talking about this one. I'll show you guys what I've been seeing here. You can see that trend line. We broke above it, held the throwback look. Now we're up there to 222s. This has been looking great. Also, MasterCard, very similar stocks. We'll see if those can continue making the lift. Technology, the third leading sector to the upside today. Consumer electronics leading there. I see some software applications names, but let's just talk about our leadership, right? Apple trying to make a little bit of a U-turn right back up. Where will it get to the point where I'll get a little bit more bullish on Apple? It will be when we cross this trend line, the long-term trend line that we broke right here. Will we get back into the 140s? 150 is really the area where I feel like the bulls will take control and lift this back up. But of course, 140 is going to be a fun level to look for. Right now, looks like we're trying to push up there. We'll see what happens next week. What will happen to Apple? Will it turn back to the downside? And of course, what will happen to this stock on earnings? And just to get that perspective, let's make sure that we kind of go ahead and look at Apple's earnings. Apple's earnings is going to be on, just to make sure here, it looks like the 2nd of February. So we still got a little bit of ways from that report. We'll see what happens there in Apple. All right, let's keep going. It looks like I see you guys in the chat talking about some different stocks. We'll get into it. Looks like Jay's talking about Shops, thoughts on MSOS. We can also take a look at that. I think in the long run, cannabis will make a run, but how long will that take? It might even take till the next president. We just don't know. It doesn't look like we've been seeing any significant run. For me, for cannabis, it needs to really start getting some of these OTC stocks to move to like the New York Stock Exchange or the NASDAQ. If that happens, that's when I really do think that we have that big breakout. That's why I think I'll just stay patient for right now. But like always, you got to be patient, right? All right, basic materials also having a good day there. Coal finally bouncing back a little bit there. BTU, a little bit of a bounce back day. Building materials, silver, gold getting a little bit of a lift there. Of course, you guys can watch GOLD for that move. That's been continuing, just stair-stepping up. NEM's another way to look at that. Newmont Corporation. Keep your eyes on these gold plays. And just one more that I usually like to play, which is AU. And that's continued a nice little lift. And look at that. That's been a big move since November. About 71% there for AU. Good move there. All right, let's keep going. We'll take a look at some other action. Copper is just been completely strong. I mean, this has not turned around one bit. FCX still fighting there. SCCO getting that nice little lift. Right now, at least, I think this trade eventually turns around. But right now, the trend's your friend. All right, let's get out of that. Let's go into what stocks got hit today. Utilities pulling back into the red today. We'll see what happens on these. Will they actually start breaking down? I've been waiting for the breakdown. Still have yet to see it actually break, right? All right, so I'll bring up the XLU as another way to kind of take a look at that. And you guys can see the XLU has been trying to come down, but it still hasn't really broken. And I'm going to look to see what happens when we actually break down through like 69 and 70s on this ETF to look to potentially get short some of these names. Dominion Energy hasn't wanted to come back. You can look at Southern Company. We'll see if that starts coming right back down. Excel Energy, very similar to that Duke trade. We'll see if it actually starts breaking. NEE is the leader. NextEra, will this break first? We'll see what happens there. All right, energy also bouncing back today. It started the day into the red and then bounced right back up. Let's go to XOM. You can see that starting to come back. SLB was one that we talked about multiple times here and also on live trading. It's been strong. We'll see if it can stay strong. Halliburton trying to battle here, trying to get back into the green. We'll see how it closes on the day. And one that's been really strong, Valero. This is a diesel play, team. Diesel play has been doing really well here. Valero getting that nice little push towards 136.10. And remember, at least for the year, this one's had a hell of a good year. First day, it went down there. Second day, it went down. But since then, nice little about 18% move there for Valero Energy Corp. As, of course, we'll take a look at the XLE. XLE making its way back. Of course, we'll see if China's demand can really get oil stocks right back to the high. That's when I think that we can get a little bit of a push out. Maybe we get towards 117, and then I'll eventually start looking for a turnaround in these energy plays. But for right now, I'm not fighting the trend. The trend looks still strong. All right, catching up with the chat out there. I can go ahead and start getting through stocks that you guys want to take a look at. We can also talk, of course, about the dash for trash. I'll take a look at a stock like BBBY. You guys can see that that pulled right back down here today. We'll look to see if this kind of gets a little run towards the close. Yesterday, this actually started running towards pretty much, I would say, around 2 p.m. is really where it started getting going. We'll see if this can have a nice little run, especially on the 3 p.m. to 4 p.m. power hour. Let's go to GME. GME is actually holding up a little bit better. GameStop. Of course, you guys can keep your eyes on some of these plays. Even AMC was getting a little bit of a lift today. We'll see what happens with these meme names. Are they able to hold on? And for that being said, Carvana is starting to crack. It was trying to get that next lift up. Got a little push, went through the high of yesterday, even the pre-market high, and then turned right back down to the downside. Be careful, team, as these could start turning around. Go Bills. I mean, they're not even playing the full Fins team. If Tua was playing, trust me, I'd be taking a bet right now that the Fins would beat the Bills. But without Tua's help, it's going to be pretty tough, Patrick. But I won't get into all that. Let's get into some action that you guys want to take a look at. I see some Tesla being mentioned and UNH. We'll get into that action. And Ruga loved money. I like that one. Let's take a look. All right, Tesla. How's that doing right now? It did get a little bit of a bounce back. The big level for me is this 123 level. If you can't get back above that, Tesla doesn't want to be strong right now, team. We'll see what happens if this cracks the 115 on the downside. That's where I'd be looking for the flush back towards the 105 and that 100 price point. I know that Kathy just keeps buying up Tesla, and some people think that this is just going to bounce back. But the truth is, I haven't heard many good positive catalysts in Tesla in a good while. What is going to be the catalyst to really drive this stock up? I haven't even heard that much mention of the Cybertruck. Where is it? What's going on? And what's going on with the Tesla Semi? How come there isn't like big orders coming in? Those are all questions that I'm starting to ask myself, as I thought those could be the growth drivers for this year. And I don't see those driving the growth. UNH, let's go to UNH here. Let's take a look there. UNH getting a little bit of a bounce back. Talked about it earlier. I wanted to recover 500 by the end of the day. That would be a good level. It did come down in the pre-market, popped above, went to even close to 510, went to 50950s, 50950s. Now pulling back. We'll look to see if it can reclaim 500 towards the close, especially on the daily candle. If you can actually start getting it to close back to 500, it at least can start using some levels as support resistance. And then we can start actually working our way, climbing this wall. Cigna is one I'll also keep watch with this because you want to keep watch on these healthcare plans. Cigna turned around first and started really breaking. Then UNH kind of followed. Let's see if Cigna can kind of lead back with that UNH report that we got today. Valero. Mara being brought up in the chat. I'll take a look at there. Mara is, of course, running off of the Bitcoin kind of push. Now, this one actually looks interesting, right? This is, at least for me, the way that I would trade this technically right off the back is that I can see 1, 2, 3 times that you're trying to break down here. I'd look for a recovery of the VWAP. If it recovers, maybe you get that next run. But of course, these stocks will go up and down with the price of Bitcoin. Eventually, you're going to see that they'll split. But for right now, they kind of run every time we get a little bit of a spike. You can go ahead and start looking at Mara. You can look at Hut. You can look at a bunch of these plays, Riot, to get the lift, right? Well, the lift on these names, you can see it in the past, are very short-lived. In the past, we've gotten some lift here on Mara, lift even in November. And yeah, you get sometimes 3-4 days rally. But after that, what happens? Boom, takedown. And so just be careful. I'm going to really watch myself on names like this, like Mara, that are really weak. I don't want to try to jump in a story that's just going to turn around for only 2 to 3 days and then just wash me out. All right, we'll see what else is going on there. XLE, Pedro, we just talked about that. If you want, you could rewind that on the kind of the oil talk that we had. We're going to keep moving towards the next conversation. It's about 149. Let's get out of what was hot and what was not. We saw some of that dash for trash starting to come back down. Let's keep talking. Let's get to the next headline. Let's go to Virgin Galactic. Let's go to SPCE. Haven't talked about this one in a long time. Today, it did get the lift. Came right back down, though. You guys can see from the price action, it didn't really hold that level. Let's talk about what their news was as we go ahead and read. Virgin Galactic, of course, announced this morning that it involved aerospace leadership structure in preparation for a commercial space line operation. It says that Aerospace Systems president will depart from the position, and Virgin Galactic expects commercial service to begin in Q2. I think the important part here is that it expects commercial service to begin in Q2. There's a lot of kind of reservations that they need to get through. A lot of people have been trying to get on this Virgin Galactic space ride. So I think in Q2, maybe we get the lift. Right now, we are getting a little bit of a push up. You can see it on the volume. Definitely got a big push today up there towards 575, trying to get to 6. We'll look to see if it gets to the 200-day moving average first. And of course, I'll be looking for this more later in the year. I'm not the biggest fan of the space tourism. I like more of my satellites. You guys know one of my favorite picks, Maxar. Maxar is already kind of getting bought out, but I'll keep my eye on if eventually we can get a little bit of a rise in some of these satellite plays. Like, who knows? Maybe Planet. Is it Planet? No, it's what's the other one? I'm forgetting the Niccolo De Masi one. Planet. I got it wrong there. I know it's Black Sky is one of them. I forgot the other ticker right now, which is the other satellite play. But to me, I think those make more sense because in the long run, we've seen what kind of space satellites have done, right? You guys have seen it, of course, the Cyberlink and kind of everything that's going on. But in my eyes, SPCE is just a kind of a little bit of a hype stock. Yeah, you'll get some lift, but will this continue going? Is space tourism really going to be a thing? I don't think so, team. You guys let me know. You guys taking a ride up there to space? I want to take the ride, but I don't know if I want to pay the price tag. All right, let's go to Rivian. As you guys wanted to talk about Rivian, I know Michael wanted to talk about it. It's going through a new low here, and it's sad, right? I know a lot of people like to talk bad about SPACs, but I mean, look at the IPOs too. Coin, Rivian, look at these stocks, right? I mean, I know everyone trashes the SPACs, but should we be trashing these IPOs, right? Were these tricks? That seems like it, right? I mean, Airbnb was another one that was a favorite. Everyone was like, yeah, I want that IPO. Still pretty low. At least not as bad as, right, like Coinbase. And let's say like Hood. Look at Robinhood. Oh, man. Not what you want to be seeing in these names, right? We'll see what happens on these. I know I don't want to touch any of these at least, but to each his own, right? We'll see if these can turn around. They've been really bad stocks, these kind of IPOs. We'll look to see if they actually turn around. Coin has actually been having a good couple of days, right? It's been a nice little 30% lift, but where is this going to get to, right? There's so much overhead supply on Coinbase. I feel like investors are going to always want to get out of this if they can get back to break even. All right, we'll see what else is going on. Kenneth, I see you trolling me a little bit. Don't worry, you at least got a laugh out of me. We'll keep pushing here. Let's get to Tesla. Tesla's stock, it was coming down because it reduced prices of its electric vehicles. Also got a downgrade to sell. Citigroup and Wells Fargo cut their price target. Tesla. Elon, are you going to save yourself, save your company? I'm still looking for the Twitter CEO, a new CEO mentioned to really kind of cause a spike in Tesla. But of course, that's just going to be anything that can hit the tape at any moment. Right now, I don't think investors are jumping in to Tesla. Well, except for Kathy, right? Everyone's trying to call the dip on this one. It still hasn't really broken back to the upside. Apple and these bigger tech stocks actually look a little bit better, right? Amazon starting to bounce back today. It's trying to get to the 100. Will Amazon get back to 100? I feel like you could see the volume here increasing, and that showed me more and more. Some people are taking some bets on Amazon this year and saying, well, underneath 100, I want a piece of Amazon. it's not a bad place to grab it, right? You're getting at least an opportunity back to where it was in 2018. So at least 4 years ago, a little bit of a discount there. We'll see what happens. DXY getting ready to test the day's low. Yes, I see the dollar going down and down. What is that going to be helping? That's going to be helping like the gold trade, right? That's what I think has really helped the gold trade really take off, is the dollar going down. Also probably helping the silver trade, right? PAAS not having a bad day. We'll see what happens with those. All right, let's keep going. We got about 5 minutes left here, team. You guys go ahead and throw up a stock if you guys have one to talk about. I'm going to go ahead and pitch it to some of the stocks that I've been looking at to see maybe do I want to take a little bit of some swing trade. Of course, some lithium names stand out to me. We could go to LAC, stocks like this. I think eventually we'll get a nice little run in this year. I did see stock like Ford down big today, GM down big. Why could that be? I think at the overall, this is going to be a bad year for auto manufacturers. I even like Fisker, and I'm not even trying to get into this name, right? Like, I like the car. I think they eventually can maybe sell some of them, but you can see it. Even though November, the Ocean started coming out, it hasn't gotten that lift that we're looking for. And I think overall, if Tesla's not going to be strong, I don't expect to see these other auto manufacturers strong either. GM, I almost expect to see it start pulling back, especially with Tesla still weak. Logi. This was definitely one of the pre-announcement disasters this week. It announced, of course, on Thursday, but continuing down today, getting some downgrades. We got to be careful in the earnings season coming up if we're going to get more of these pre-announcements. This is what I would be the most concerned about, because if one of these bigger stocks come in like Apple and pre-announces that, let's say, I don't know, maybe iPhone demand is down or they weren't able to sell as many iPhones as they expected, well, things like that can definitely just knock us right back down. SPY overall, let's get back to it. SPY is trying to keep going in the 397. We talked about when the show started, would we close above the 200-day moving average? 397.20. It's going to be very vital if we can close above that. Right now, we're above it. Let's see if we can actually close up there. And then, who knows? Maybe we get to that 400, 410. Out of the channel would be very important. If we get out of this channel, there's going to be some people starting to call all-time highs. All right, one last one. A man with tools is throwing in Volta here. I don't mind taking a look at that one. Let's go to that one right now. VLTA, Volta, trying to make its way back here. Looks to me like it might try to make its way towards $1. But I wouldn't expect too much from that, right? Because you are getting a little bit of a turnaround. This isn't the worst stock to kind of get a little bit of a push up. You can see also the volume that's come in the name, right? A lot of volume has come in the name as of late. But as you get closer to that $1, be careful, because you could turn right back around. We'll see what happens on a name like Volta. Was also taking a look at like EVgo earlier in the week. That's been having a good time. ChargePoint starting to get a good day. Doesn't look too bad on some of these plays. We'll see what happens on a name like Volta. All right, that's going to do it for me. I'm big on Amazon, says Kyle James. Can't go wrong. Can't go wrong at all. Amazon, at the end of the day, right? When we do investments, we want to also ask ourselves the question, is this company going away anytime soon? We all know it. Amazon will find their way. If not, they'll make some new products, have some acquisitions. These are all stocks that we can think about in the long run. Do we want to have some exposure? I know I want to have some exposure to Amazon. I don't know about you guys. You guys make your own investment decision. But will Amazon be able to find its way? I kind of always think so, right? We'll see what happens. I can't blame you for that outlook, Kyle, and appreciate the love for the show. We always try to go ahead and do better. Like always, if you guys have any feedback, you guys can reach out to me, Mitch@benzinga.com. I want to make Stock Market Movers the best show that we have. And really, how I do that is you guys giving me the feedback. What do you like about this show? What do you not like? If you don't like something, feel free to let me know. I don't take it personal. It's all about trying to make a better show and give the value back to you guys. We'll see you guys a little bit later today on At the Close, 3:30 p.m. Eastern. Don't miss it, team. I'll have Joel Alconen and I go through all the action in the markets. Up next, you guys got a little bit of a break. It's Friday, no roadmap action. So I'll see you back at 3:30, and then we'll wrap up the day, wrap up the week, and have ourselves a nice long weekend. So I will see you guys over at 3:30 Eastern. Don't miss it. Be square.